Welcome to the Rule Classroom Plus. We will be bringing on Rick Rule, and we will be taking your questions. We're going to be pulling questions from the Rule Classroom Plus, but everyone in the Rule Classroom can watch the video. So glad to see people are starting to filter in here. Got Deborah, Zahara, the Master of Ceremonies himself. We can hear you now, Rick.
And you can't see me?
No, now we can. Okay. We got it figured out. How are you, sir?
Other than operator errors in audio and video, I'm fine. How are you, sir?
Very good. Very good. All the better to be with you.
Thank you.
Okay. I guess we'll start out like we always do. Do you have any big macro thoughts? What's on your mind today?
Well, a couple things on my mind today. I was doing some back of the envelope work for the last couple of days on some of the companies attending our symposium July 7th through 11. And it struck me that despite the fact that the share prices of the gold producers are up, if you do net present value calculations with today's gold prices, rather than the gold prices that existed the last time I did net present value calculations, despite the fact that they're up on a net present value basis, they're actually in many cases cheaper than they were initially. Now, of course, that presumes that today's gold prices hold. You'll know from other conversations that I think it's more likely than not, at least that over the next few years, gold prices rise as opposed to stay static. It was just interesting to me, the accretion of value that occurs, net present value that occurs at these margins. There could, of course, be a blowout in costs, which could shrink margins, lots of things that could go wrong. The second thing that amuses me always is that now that a bid is returning to the mining shares, the volume of financings is going crazy. You need to be very careful when a company that you own does a financing as to what they're going to use that financing for. You know, we, Steve, by we, I mean you and I and the other people at the Rule Symposium, make jokes about the government's issuance of unbacked paper, which is to say currency.
Yeah.
But when the mining industry is in full swing, these junior mining issuers issue so much unbacked paper that they make the federal government look like a piker. If you want to see real inflation, look at the share counts of a junior gold producer, or pardon me, a junior gold explorer during periods of time when they can access capital markets. We're really seeing fundraising get into high gear now that there's a bid. And that isn't necessarily a bad thing. I saw the financing announcement on Aya Gold and Silver yesterday. I had a chance to talk to Benoit about it. He said they issued 7% of the company to raise $145 million Canadian to accelerate the development of a project that they had looked at using cash flow to accelerate over 3 or 4 years. And they did it without issuing a share to a 20 million share short position. In other words, they maintained what could become a short trap and raised capital to accelerate the development of an already established asset. This is an example of a good financing. I suspect we're going to see some financings and talk about them in the Rule Classroom in the next 3 months that are not so good. So, there's all kinds of things in the news today. I see questions in the question section about Ivanhoe. Did I buy more Ivanhoe today? I'm going to wait and see. Now, understand that all of the Ivanhoe that I have is free. I bought almost all of it below $1, sold it. The announcement that they made, the preliminary announcement that they made, leads one to suggest that future extraction of this deposit will be at higher cost and will have to be more conservative. We don't know how much of each. I also believe that what we're seeing right now is a 6-month hiccup in what's a 30-year mine life. And make no mistake, I will be a buyer of Ivanhoe. I'm not a buyer of Ivanhoe today because I suspect that the answer to the unanswered questions will be fairly complex and that most people won't pay attention to it. They will be reflexive and reactive. And to the extent that we get enough information to answer the unanswered question, assuming that Ivanhoe is still under siege, I will certainly be a buyer. This is a world-class deposit.
Okay. And the humans that are fighting up above it, this will be a blip in time in the mine life.
Yeah, I mean, it could easily be a bad year. We don't know what the mining costs around the balance of Kakula are going to be. It would appear, and it's by no means certain, that they were too aggressive in mining, that they left too many pillars, and as a consequence, they had seismic events around the roof, which caused sequential pillar collapses. The consequence of that is that the mine flooded. They've done an amazing job of buying and installing pumps. They were dealing with a water ingress of about 3,300 liters per second, and they have managed to deal with that in 2 weeks, which is an astonishing achievement. But it's going to be a while before we understand the true impact of this.
Okay. All right. Ashley wants to know about Hot Chili. What is your ranking for this company at the moment?
I have Hot Chile as a 5. I love the size of the deposit. I don't like the fact that there's no high-grade starter. The indicated internal rate of return on this is 19%, and I normally like a 25% internal rate of return for me to invest. There is a new discovery area where there are holes running at 0.7, 0.8. Keep in mind that the average grade here is more like 0.4. I'm also attracted to the concept of the water asset, but I don't know enough about it yet. It's worthy to note that the net present value of the copper asset is about $1 billion, and the indicated net present value of the water asset is about $1 billion. And all of this comes in a Canadian $80 million wrapper. So price to NAV is very, very, very cheap. But the upfront capital costs are high, and thus far, the indicated internal rates of return are low. If we develop through exploration, which I actually think, although don't know, that we will, this will suddenly become very cheap. If you get your capital back earlier from a high-grade starter pit, and you're able to amortize the upfront capital expenses, having received back your capital, but over as much copper as is in place, then this thing goes from being interesting to stupid cheap.
Okay. Yeah, and they like to do that, right? I mean, you want to go for the easiest stuff first, so it's nice to have a deposit where the stuff is right near surface and you can recoup a lot of what you've put into the project, right?
Yeah, the upfront capital cost to build this thing at scale are around $1 billion. $1 billion raise is tough for a small cap company. They likely will have to do it in conjunction with somebody else. Yeah. If they have the ability to get capital payback in 2.5 years, then time value of money means that the net present value of the deposit, or not the net present value, I'm sorry, the IRR, goes up really substantially, and that's what I'd like to see.
Okay. All right. How do you break down, like, we want the CEO to own a lot of their own company. We want grades to be high. We want, there is no perfect place. Like, where do you kind of draw the line of, like, okay, well, this hit 7 out of 10 of my indicators here, I'm going to go with it. Like, how do you draw those lines?
In earlier stage companies, I always err on the side of the people. If in an early stage company, like when Bob Quartermain came into Dakota, I knew about Dakota with the prior team, but the prior team were the former operators of the mine. They had no track record of development, no track record of capital raising. When Quartermain came in, I said, okay, game over,
Yeah.
I knew that he would find a way to know what the best thing to do with the project was going forward. The truth is that there's no one size fits all answer. It's like the young man whose fantasy is a long weekend with 4 Victoria's Secret models. Would he settle for one? Likely, you know.
That's a good.
I like big deposits, and I like high grade deposits, and I like great people. You know, I want it all. I seldom can have it all, and I should say that I've learned over the years that if I can't find the wart, if I can't find the reason that something's cheap, I don't know enough to write the check.
Okay. That's a really good point. Okay. Alan wants to know, Rick, do the proposed new Ecuadorian fees on the mining sector potentially affect your rankings on Lundin Gold or Lumina Gold?
Lumina Gold has been sold, so I don't have to worry about it there. It's been sold to buyers, assuming that it closes. I don't think that the fees will have a material impact on Lundin. What the fees may have an impact on are development stage and exploration stage projects in Ecuador. I think that this is a function of internal Ecuadorian politics. The current Ecuadorian administration is much more pro-mining than its predecessors. It's trying to justify its pro-mining stance to the population, saying that we are negotiating with the foreigners to get a larger piece of the pie. Mining, Steve, as you know, is unfortunate in that it's capital intensive and fixed. If a government gets out of line, you can't pull up the mine and move it across the border to some other country. It's stuck. And the consequence of that is that we're always a prime target for larcenous governments.
Okay. Who did Lumina get sold to? I didn't see that.
A private Chinese outfit, I believe. With everything that's been happening in the last 2 weeks, I didn't pay enough attention.
Okay. All right. Yeah, I never owned them, but interesting.
Remember, it was being built. It was built to be sold.
Yeah.
This wasn't ever anything Ross was going to put into production himself.
Yeah. Okay. All right. Han wants to know, hi, Rick, could you please comment on Perpetua Resources and Aya Gold and Silver? Do you consider Perpetua and Aya as a tier 1 deposit? What ranking do you give them?
Perpetua, to help
Perpetua.
you with Perpetua is a collection of assets, one of which I had a former involvement in. They are now permitted, which is quite an achievement in Idaho after 20 years of trying, and financed to production. They're controlled now by the billionaire John Paulson, who has become a real gold bug. It's worthy to note that he was an important participant in the financing. I think we're now coming up onto Lobo Tigre's golden runway, that period of time when all of the permits and all of the construction financing and everything has been approved. And now we begin to get reality pricing. We begin to chip away at the discount to net asset value that occurs as a consequence of people's concern as to whether the permitting or the financing can be obtained. This has happened. Perpetua is on the fringes of a tier 1 deposit. A tier 1 deposit in the gold space, by my count, is usually 5 million ounces. It could be a smaller number if they're extraordinarily high grade. This is not. There are some problematic ounces in the sense that they're refractory, which means that they require some extra processing. Part of the deposit was previously mined, and in one of the old pits, there is ingress from the Snake River. So there will be environmental considerations, and the mine itself borders a ski resort. So there are some challenges. The consequence of that is that I consider this to be a strong tier 2 deposit rather than a tier 1 deposit. It will enjoy market favor because it's in the United States. I'm not sure that political market favor is justified, but that's a different question. But all of the roadblocks are gone now. Federal, state, and local approvals, financing, all that stuff done. There will be operating challenges around refractory ore and around being right next to the Snake River and right next to a ski resort. But the bigger challenges have been confronted. At Aya, you're talking about a 350 million ounce silver deposit. Again, that's right on the verge of being tier one, about 5 million gold equivalent ounces. This is not yet tier one, but I believe it can be tier one. And I believe that the financing announced yesterday will lead to the deployment of as many as 10 more rigs on the deposit. And it could very well be in the next year and a half that this deposit goes from, 350 million ounces to 400 or 450. Clearly, tier one category. Note that these are pretty good grade ounces too. Sometimes when people talk about very large ounce totals, they're talking about large ounce totals at grades that resemble seawater.
Okay.
highly diluted grades. In this case, you have both tonnage and grade.
Okay. All right. And Daniel wants to know Rick's ranking on Surge battery metals and Cerra de Pasco.
Surge is currently unranked. I'm trying to stumble my way through the disclosure that they filed 5 days ago, and I'm trying to stumble through the valuation done by my former colleagues at Sprott Capital Partners. I think it's fair to say that we're coming into the period now, early on, of ugly lithium oversupply. And I think that we're going to come into a lot of failings in the lithium space. Surge appears to me to be higher quality than the next door deposit, which is being financed and put into production. So I think it may be one of the lithium survivors. So it's worth my while to learn it, but I don't have a ranking. Cerra de Pasco I have as a 5. I'd love to upgrade it to 4 because it is a very large silver resource, somewhere around 400 million ounces. It doesn't need to be mined. It's in tails. That means it's low grade, but you don't have to mine it. You don't have to crush it. You need to regrind it and process it. The process technology is not in place. The infrastructure to process it's not in place. So there's lots of unanswered questions. As I say, I have it as a 5. This is not for the faint of heart. This is extremely leveraged to the silver price, and there's lots of unanswered questions around process extraction technology.
Okay, that is pretty cool though that it's all tailings. That's big.
It's really nice. I mean, theoretically, you just put a dredge out there.
Yeah.
You pump the stuff by slurry to a mill which has not been built yet to regrind the stuff and then float it in tanks, separate out the silver from already mined, already ground material. There are probably going to be variations in grade in the tails because they reflect the variations in grade that were mined over 400 or 500 million years. There's lots of unanswered questions, but the wrapper is so cheap and the leverage to silver is so great that I personally couldn't resist.
Yeah. Okay. David M. wants to know, hi, Rick, what do you think about the Brazilian government funding shortlisting of Aclara and Meteoric and their rankings?
I have Meteoric as a 4, verging on a 3. Really like this. It's a big deposit. The metallurgy is uncertain. The size is uncertain. The grade is uncertain. But it would appear that this is easily a tier 1 deposit. Easily, in this particular case, I'm going to say indicated gross in situ extractable values in the $20 billion range. A deposit that, from bench tests, looks like it would be in the lowest cost quartile of the world's heavy rare earth producers.
Outside of China?
not even outside of China. It's important to note that Chinese rare earth costs are going up very rapidly. The environmental practices that enabled the Chinese to be low-cost producers are no longer tolerated by either the Chinese government or the Chinese citizenry. One of the great unknown fundamentals around rare earths is that although the Chinese are still the most efficient producers in the world, largely because they're among the only producers in the world, the costs that led the Chinese to dominate the world's rare earth market are rising very, very rapidly today, which is part of the case I like. The other part of the case I like is that, and I think this is unfortunate for humankind, but it's fortunate for me, that there are growing geopolitical blocks around the control of rare earths. The Chinese have politicized rare earths. They recently have reached a temporary accord with Mr. Trump. Of course, either side could break that accord. We've seen that before. Suffice it to say, high-tech manufacturers around the world want secure sources of supply. In particular, the U.S. State Department does. And what that means is that you likely have much lower costs of capital in rare earths than you would in other materials. The U.S. State Department has been extremely aggressive in Brazil, trying to convince the Brazilians to advance these two projects, the Ecora project and the Meteoric project, further along the development pipeline. I think it's in Brazil's interest to do this. And so you're seeing fairly rapid progress in these companies. It should be noted, given all the positive things I've said about Meteoric, they're damn near out of money. They're going to have to do a financing, and I think they're going to have to do a big financing. I don't think that they want to do just-in-time funding where they raise 5 million here, 6 million there, 4 million there. I think they'll go out to raise 25 and 30 million so that they can delineate the ore body. They can do at least I think they need $25 to $30 million to get them through a bankable feasibility study. So that's going to weigh on the stock until they get that done. I've given the company a preliminary indication of how much money I would like to invest and the terms that would be acceptable to me. I know that I'm competing. I may be competing with the State Department. So the management team is wisely looking at all their options.
Okay. And I maybe I misspoke. He wrote Aclara. Is that a company?
Yes, that's correct. Aclara is another high quality rare earths exploration development play in Brazil, fronted by an extremely high quality Peruvian mining group.
Okay. All right. David Riley wants to know, he says, Steve, could you ask Rick about two critical mineral companies I'm watching, Guardian Metal Resources and Stillwater Critical Minerals? And if you can comment and give rankings.
I don't know enough about either to comment or rank.
Okay. And Asymmetric Research, we know this guy.
Yeah.
He's curious. We already hit on Cerra de Pasco, so we can skip that one. McEwen.
McEwen's interesting. I've known Rob a long time, and I made a lot of money with him twice. Let's get that out of the way. He's a personal friend. I like spending time with him. He's made me a lot of money, so he's in my good books. The gold assets are uninspiring, but Rob has a habit of amalgamating fairly small producers into a big whole. He believes that he has the ability in the 5-year time frame to triple or quadruple gold production in McEwen mining. The wild card is that McEwen mining controls McEwen copper, and McEwen copper has a copper deposit in Argentina that's an absolute monster. The problem with the deposit is that it's an open pit deposit and it lies on a valley floor, which means that the sidewall pushbacks where you go into the surrounding mountains will be very high. Mm-hmm. It's better if your deposit is up on the slope and you're using gravity to move rock and to move ore. This is
a diesel.
This is in effect an anti-gravity deposit. You're down in a bowl. So it'll be interesting to see how they overcome it. I think they will overcome it. If you look at the shareholders, people like Rio Tinto, high quality silver companies, and it's worth the effort because it's so large.
Okay. Josh wants to know, do you have any, or does Rick own any Targa exploration?
I do not own Targa.
Okay. Diane wants to know your opinion on Fortuna mining.
I own a little Fortuna. Mercifully, I bought it when it was stupidly cheap. And I sold enough that I have no basis in the stock. Fortuna started life as a small underground high grade developer in Latin America. Fairly successful doing that, branched out into a high altitude, low grade open pit operation in Argentina, had real problems there, but solved the problems. And now they've moved on to being a pretty successful West African developer. They are generating a lot of free cash. They recently made a strategic investment in a fairly successful explorer in West Africa. I'm positively inclined towards Fortuna. Probably more positively inclined because the stock I have is free.
Fortuna has been fortuitous. Okay. Daniel wants to know, what is Rick's opinion on Paladin Energy?
Paladin?
Mm-hmm.
I'm very attracted to Paladin. It's selling now after a 40% run at a small premium to the price that it paid to acquire Fission, meaning that you get the old Paladin assets for free. That's a really good deal. High quality management team. They're a bit aggressive. You have to watch the way they strap on acquisitions, and in particular, the way they strap on debt. My hope is that their prior experience and Paladin's prior experience will make them prudent with their balance sheet. It's important to note that Paladin will likely be a real beneficiary of the coming change in the uranium market around the utilization of long-term contracts with investment-grade counterparties, using these contracts to secure project finance to build deposits that otherwise companies of this size wouldn't be able to build. I note, too, that the fission assets, which they're acquiring have acquired in the far west of the Athabasca Basin, are contiguous to the next-gen assets. And together, they constitute the largest and highest grade undeveloped uranium deposit in the world. It may be that these assets are developed separately. That would be almost felony stupid, but the mining business has been felony stupid in the past. Paladin, to the extent that they can cause that fission asset to be contributed to the greater whole of the next gen, would have a foothold in the development of the largest and highest grade undeveloped uranium deposit on the planet. And as a consequence of that, could be itself a strategic acquisition, either for Cameco or for a major mining company that wants to participate in the development of this asset.
Okay. And David wants to know, he says, I saw Rick's recent interview with Latin Metals. Can you give your comments and ranking on it?
I have Latin Metals as a 5. I like the process, and I like the fact that given the advanced exploration stage and the funding commitments of the partner, that you have a lot of torque in the stock that somebody else pays for. Note that this is very high risk exploration. The type of investor who would buy, say, an Agnico Eagle or a Wheaton Precious probably isn't the type of investor, or I should say speculator, who should be involved in prospect generation or exploration.
Okay. And David M. wants to know about ranking and thoughts on Integra Resources.
I like Integra. Integra, if we are where I think we are in the gold cycle, evidences excellent leverage to gold. They have a existing producing mine, which they bought out of the financial breakup of Argonaut Gold. And they bought it fortuitously before the most recent increase in the gold price. The consequence of that is that the free cash flow that they're enjoying is substantially above the expectations, the guidance they gave the market. as recently as 6 months ago. The hope is that they use that free cash flow and that management team to develop at least 3 development stage projects, the biggest of which is Delamar on the Oregon-Idaho line. These are assets I know fairly well. These are assets that kind of worked at $2,500 gold and scream at $3,500 gold.
Okay. Let's see. David Riley, Lead Metals. Tillman, he wants to know, have you read the newsletter from Doug Casey with Palantir? If yes, would you be willing to share your thoughts on that?
I have not yet read that. I'm familiar with Doug Casey's analysis of Palantir, which is to say it's the perfect fascist enterprise, a company that thrives by assisting big government and big companies to manipulate the data around individual citizens. I look forward to reading this. I think Doug Casey is one of the best social commentators I know in the world. That commentary will not be looked upon favorably by conservative viewers.
That's probably saying it lightly. All right. All the way from India, Zahara wants to know, in a multi-year gold bull market, would all the 4 phases of the Lassonde curve still be valid, or would the frenzy eliminate the boring phase of the curve and keep prices high?
It wouldn't eliminate the boring phase, but it would mitigate the boring phase. A rising tide floats all ships. And what you'll see, I think, in the gold bull market that we're going to have is going to be extraordinary and really stupid excesses in the junior sector. Remember, Steve, our prior characterization of a bull market as resembling, in a visual sense, a circus master's whip.
Yeah, the bull whip.
The handle being the metal itself. It moves first, but it moves the shortest. Then the part comes that we're in now. The best of the equities moves. They move further than the gold did, and they move faster. Then the best of the rest. By the time you get to the end of the whip, that whip is traveling really, really, really fast. And that's where the money's really lost. When you see the penny dreadfuls really start to rip, when you see the crypto scamsters and the tech scamsters move into telling gold stories, it's time to sell the whole value chain.
Okay. That will be our test, but we're a ways away from that. Josh wants to know, what does Rick think of Atex Resources drill results released on Monday?
Very nice. I haven't had a chance to integrate them into their prior drill results. One of the downsides of putting on a big conference and living a life is that you don't have time to assimilate all of the data available to you, even in the companies that you already own.
We have to automate your ranking system. Maybe we can use ChatGPT for that. Stefan wants to know, may you please comment on the capital raise of Aya Gold and Silver? Is the dilution too high?
Yeah, we talked about that at the beginning of the interview. Aya Gold and Silver raised something like $140 million Canadian by giving up 7% of the company. They had about 25 million cash on the balance sheet, so they didn't have an immediate need for the cash. But what they're going to use the cash for is greatly expanding the exploration delineation drilling around the development of a very large 350 million ounce silver deposit. In this particular case, having talked to Benoit LaSalle, by the way, Benoit will be an exhibitor at the Natural Resources Investment Symposium, I'm convinced that given the use of proceeds, that this financing is in the best interest of shareholders.
You're right. I didn't catch that as I was reading it. Josh is asking, what do you think about Rua Gold?
I don't know enough to comment. I know the asset. I know some of the people behind Rua. The Rua people actually reached out to me. They had heard about the proposal at the Rua Classroom that we emulate Shark Tank. that we allow companies who think they're undervalued to come and face a panel of experts in a no-holds-barred due diligence. I admire them for their courage, and that's something that after the conference, Albert and I might cause to occur. It's been a fantasy of mine for about 2 years that we develop a format where companies who believe that they're seriously undervalued and deserve exposure come to the Rule Classroom, face 2,000 or 3,000 of their closest friends, give their story, and face questioning from a non-hostile but also non-friendly counsel. And then we open up the question and answer to the members of the classroom. RUA has had the courage, I'm not sure if it's good sense or not, but they've had the courage to propose themselves as being one of the tests. People who are interested in this format can look at a couple of test drives that Albert and I have done around things like Magna.
Yeah, that was a fun one. Helen wants to know, does Rick still like Riverside after the Blue Jay spinoff?
Yeah, I've known Jean-Marc Stouty since he was director of new business development at BHP and then tech, so I've known him for a very long time. I have a very, very high regard for him. He has not been lucky. He has not made his big discovery, which is how prospect generators make a lot of money. But he's made me money along the way by taking, if my memory serves me well, 4 projects that were in inventory, bringing in third parties, funding public companies, and dividending out the carried interest that Riverside enjoyed to the shareholders. He has paid me substantially more in script dividends than I've invested in the company. So yes, I'm attracted to that.
Okay. And Alan wants a follow-up to Lumina Gold. Do you still own it?
Pardon me?
Alan wants a follow-up with Lumina Gold. Do you still own Lumina?
It will be sold in the transaction. I've not yet sold it.
Okay. A smelter in the U.S. Interesting. Diane wants to know, do you know if there is a smelter in the U.S. that can process rare earths?
There is not a smelter. There's a refiner in the U.S., basically a uranium facility at Blanding, Utah, owned by Energy Fuels, that has the ability to separate and refine some rare earth elements. It's in the process of being upgraded. There are 2 other rare earth processing facilities that are at the feasibility stage for construction in the United States.
Interesting. Okay. Aram wants to know, what do you think of strategic metals?
I don't know enough about strategic any longer to comment. Many years ago, I was the largest shareholder. That had a very happy ending for me. If I recall correctly, we financed it at 25 cents with a full warrant and saw it proceed to having a $3 bid. Awful lot of fun in a prior cycle.
That is fun. Okay, he also wants to know, do you still think Dundee Corporation is a deep value, and what is your ranking?
Yes, I do. I think Dundee is deep value. I have it as a 4.
Okay. David wants to know, has Rick got any new thoughts and ratings on B2 Gold?
But B2 is a work in progress. Before I buy more stock, I'm a pretty good sized shareholder. Before I buy more stock, I need to see a completion of their Northern Canadian construction. I was recently penalized for making a big bet on time, on budget completion by Equinox Gold. And I'm not going to make that same mistake on B2. Assuming it trades higher than it trades at now in anticipation of successful completion, I'm going to seek successful completion before I buy more stock. I have a really high regard for the CEO, Clive Johnson, who I've known virtually my entire adult life. My only criticism of Clive is he's my vintage. At 72 years of age, you wonder if he has the energy to do in the future what he's done in the past. He's got a lot on his plate.
They might have an interesting catalyst here in a couple of weeks, too, with the permits out in Africa.
Yep.
So that could be a bump.
A lot of things happening in Africa. They've got a good development pipeline, and they have an agreement in place with the government of Mali, which would theoretically allow them to expand production at Fekola, which is a clearly top class tier one asset.
Yeah, I've got a long dated call on that for like 2027, and it is performing beautifully. I keep thinking, should I sell it? And I'm like, no, hold out. All right. Aram wants to know about Empress Royalty recent stock options and RSU's grant to the management. Was it not too excessive?
I don't like the combination of options and RSUs. I want incentive compensation to be less than 10% of total capitalization. I'm comforted by the fact that they issued the incentive compensation after rather than before a run in the stock. I hate that circumstance where the company goes quiet for 6 months, issues options, and then goes to work, takes the stock up, that type of thing. This is very much a non-abusive incentive grant. I haven't looked at the quantum of options and RSUs relative to existing options and RSUs relative to the issued and outstanding. I personally want total equity incentives to be less than 10% of the total issued and outstanding in the company. I also like options, RSUs, DSUs, that type of thing, to be issued as I like to see cash bonuses issued around specific performance. And I noticed that at Empress, this was not issued around specific performance. Rather, the incentive here is to get the share price up.
Okay. Let's see. Josh wants to know current ranking for KLD. Is that Kenorland Minerals? I might have to look up the ticker.
I'm terrible with symbols too. I do names.
Okay, Josh, go ahead and put in what.
If it's Kenorland, I have it as a 4, with the possibility of an upgrade to 3. Kenorland is selling I think at a discount to the value of cash and the Quebec royalty, meaning that you get the rest of the company for free, and the rest of the company has real value. It's run by a guy named Zach Flood, who I've known so long that I did business with his dad. A very, very high quality explorer, very well backed. Again, this is an exploration company, and I'm always concerned about saying very nice things around speculative companies in a discussion that also might have Agnico Eagle and Wheaton Precious. You need to be very careful that you're not juxtaposing apples to oranges in these qualitative discussions.
Okay. All right. And David wants to know, does Rick have comments and a ranking on Aftermath Silver?
I do not.
Okay. Aram wants to know, is Devon still a buy?
Yes.
Okay.
Yeah,
What ranking you get?
Devon is likely to be soft, I think, for the next 2, 3, maybe even 6 months. We have had the increase in the natural gas price, Steve, that you and I were talking about 2 years ago.
Yeah.
That was inevitability, and it occurred. We're currently experiencing some softness, although the oil quote has moved up with the hostilities in Iran, or the potential hostilities in Iran. But both domestic U.S. oil and natural gas prices have been weak. I think suggesting that we've gone from fears that we're heading into a recession to being in a recession. When you see production volumes flat or down, and you see pricing down, what that's telling you is that current period demand is lousy. So people who hold Devon need to understand that it is sensitive to the domestic economy, and the domestic economy appears to be slowing fairly rapidly.
Okay. Do you think their dividends are sustainable, or is that not something you even care about? You just want the value?
You know, I'm always of mixed minds about a dividend. Our mutual friend Doug Casey says that earned dividends are, quote, outward manifestations of inward grace. I get that. I like the fact that they can pay them. I like the fact that they're polite and they do pay them. I would always prefer to see capital return to shareholders by share buybacks. I'd rather pay capital gains tax than income tax. I would rather more if the company can reinvest that capital at high internal rates of return. So my preference would be that Devon had investment opportunities that were so overwhelming that they reduced the dividend. I realize that I'm alone in that regard. But you asked me, so I told you. I think the Devon management team, they've been around the oil patch for 30 years. They're pretty cautious guys with money, which is why they're still around. And they have a bunch of shareholders that like to get paid. So I suspect that they will do what they can to defend the dividend. If we go from indications of a recession to a full-blown recession, you will see Devon use their free cash either to buy distressed assets or to increase their financial flexibility.
Okay. But generally speaking, you would, by buybacks, you would rather own a bigger piece of the pie and get taxed on that than get taxed on income from the dividends.
Or not sell and not get taxed. I'd rather either own a bigger piece of the pie, or if I want cash, I'd rather sell shares into a buyback and pay capital gains tax as opposed to paying income tax on passive income from the dividends.
Yeah.
For various reasons, both arithmetic and patriotic, I'm tax averse.
Yeah. Yes. Okay, we hit Devon, Aftermath, and Arims. Can you ask Steve? Steve, can you ask Rick about Hyasa Metals? Am I pronouncing that right?
I don't know it.
Okay. All right. Franco-Nevada and EMX gave them money, and their market cap is only $3 million. All right. Maybe one to look into.
I wish I did know it.
Yeah, I was just thinking the same thing.
Guys are very, very, very high quality explorers. And Franco wouldn't have given money to a small cap company like that if they didn't really like the people. You know, this is a rounding error.
Yeah.
Franco, Franco inhales and exhales $3 million. So.
Yeah. Okay. All right, everyone in the classroom, your next assignment, Hyasa Metals, Hyasa. Go. All right. David Riley wants to know, speaking of uranium, does Rick have any comments and ratings on Lotus and F3 uranium?
S3, I'm looking at their most recent drill results, so I don't. Lotus, what ranking do I have? I think I have Lotus at a 5. We follow and rank almost 800 companies, so sometimes I get tripped up in my memory.
Okay. Daniel wants to know, which books will Rick recommend for natural resource investors, both for mining and for oil and gas?
I don't have any off the top of my head. There's one, God, I even forget the name of it. There's one that I'll try and post in the discussion group. It's a book about decisional analysis.
Decisional analysis in petroleum or oil. We've talked about this one maybe 6 months ago. It's a long title.
It's not a book for somebody who isn't reasonably competent at math, or at least can't operate a programmable calculator. On the mining side, I always like to get people to start with Mining Explained. It's much different, a much more preliminary book. It's a book that teaches you what the words mean. I can tell you, at the risks of self-flattery, that for most people, playing the tapes of Introduction to Natural Resource Investing at the real classroom is as good as an introduction as you're going to get.
Okay. All right. David wants to know, Rick has mentioned Queens Road Capital recently. What does he think of their Challenger Gold holding?
I don't know enough about Challenger Gold to comment. I've known the Queens Road people for a long time. I hold them in very high regard. They were with me, early and supportive shareholders of Uranium Energy and Uranium Royalty. I've known them in quite a few names, and I hold those people in high regard. I can't make a specific comment on Challenger.
Okay. Ascot Gold. You're familiar with that one, correct?
I am.
Okay.
I don't hold Ascot. Large, very large, low-grade deposit. Very competent CEO. He's been up there a long time as a geo. What I'm looking for is indications that within that very large, low-grade envelope, there's sufficient rock preparation somewhere for a high-grade starter. Similar to what Bob Quartermain did at the Snowfield deposit, with finding the high-grade deposit that became the Brucejack mine along that Brucejack fault. That changes things at Ascot if it occurs.
Okay. David wants to know, I see Chakana Copper seems to be trying to come back to life. Does Rick have any comments, and has he sold all of his stock already?
I had too much to sell. When the reason to own a stock goes away, the stock has to go away. The problem was that in a fairly illiquid stock, I looked at a $6 million market cap, and I thought, well, if you're wrong, you lose half your money. If you're right, you make 10 times your money. And I like the fact that they had 3 ideas. Sadly, they dusted all 3 ideas. It is still an interesting exploration project, with the caveat that no good geologist drills his worst idea first. And given the trading volume in the stock, had I been able to sell my stock, I would have. I now believe that likely they will have to revisit the whole project and maybe even add a new project to the company. They'll likely have to roll the company back and start again. If I had had a more modest shareholding, I would have sold it.
Okay. That's a first world problem. Let's see. We talked about Fortuna. Conrad wants to know about Alamos Gold. Is it a good buy? What ranking do you have?
I have Alamos as a 4. It has experienced a bit of softness relative to other peer companies. Alamos, in terms of production growth, all-in sustaining costs, return on capital employed, general and administrative expense relative to AUM or free cash flow, is an absolute tier 1 performer. And the stock prices reflected it. The chart, not that I'm a technical guy, Steve, but you are, when a chart goes from lower left to upper right, it's often, in a company of its size, a good indicator. Is the stock reaching lofty levels relative to its development upside? Perhaps. It's had a hell of a run, but the run has been deserved in a market where its peer groups have not been as able to turn rising gold prices into rising margins and free cash flow. Alamos has been a real standover, like Lundin Gold.
Okay. Paula wants to know about the Vizslas. She says, can you ask Rick how interesting he finds Vizsla Copper and Vizsla Royalty? It seems as though the number of royalty companies are increasing pretty rapidly.
Yeah, Vizsla Copper, I don't own. I know the project. I'd need to see better data before I would own it. I have a lot of time for Craig Perry. I've known him for many, many years, going back to Australia before he came over to Canada. Vizsla Silver was an outstanding discovery. Vizsla Royalty, I need to know more about how they add royalties. I need to know what their definable competitive advantage over their peers is. You'll notice, Steve, that when I buy a royalty company, a small one, a Nations Royalty, an Empress, somebody like that, I buy it because there is some definable competitive advantage internally that allows them to outcompete. And I don't know yet what Vizsla Royalty's definable competitive advantage is. I look forward to asking Craig that very question at the Natural Resources Investment Symposium.
Okay. Hey, Arthur, we talked about Ecora earlier. Watch catch it on the replay. Aram wants to know about what you think of Fury Gold.
Uh, Again, not enough data for me to comment. I like the people. I like the idea. I just haven't seen the data that supports the idea.
Okay. And Mark wants to know rankings for silver miners, Buenaventura, Peñoles, and Fresnillo.
I have all three as fours.
Hmm.
Uh, I am really constructive about the silver price in the next 2 or 3 years. The risk you have with all three is that there are legitimate social and political concerns, particularly around Fresnillo and Peñoles, where the current president of Mexico has enmity for the management teams and the control shareholders of those two companies personally. It's as though you were a silver miner in the US and you'd pissed off Trump. Interesting place to be. There are also challenges in Peru, although they're not personal. All three of these companies have legacy assets which they have been slow to develop, which could see much more rapid development in a constructive silver price environment. Do not hold these stocks if watching challenging sociology unfold on the nightly news is something that's going to give you discomfort, because you're going to see it.
Okay. And Aram wants to know, what do you think of Silver Crown royalties?
Don't know enough about Silver Crown to comment, although I do not own it. It is sort of an investment banker's construct around the idea that silver stocks are rare and royalty stocks command higher valuations. And if you could consolidate a basket of silver royalties, that the market should like it. The market has liked it, but to me, the juxtaposition between the market cap and the net present value of the royalties that they've assembled is excessive. That doesn't mean in a silver bull market it wouldn't rip. It also doesn't mean that they wouldn't be able to acquire one or more good silver royalties. The juxtaposition between price and value as it currently sits is unattractive to me.
Okay. Josh wants to know, what does Rick think Armitage Gold? Do you think it's undervalued? What do you think of Armitage?
Don't know enough to comment.
Okay. David Riley says, Rick hasn't mentioned Sandstorm Gold for a while. Do you still like it?
I do. They made, I would say, some severe capital allocation decisions, and they're being punished for that. But the free cash that they're generating is paying down the debt very rapidly, which is not reflected in the share price. There has been problems around putting the Hodmodden deposit into production. Those problems involve a tailings failure in Turkey, which has led to regulatory problems.
Okay. Helen wants to know, does Rick have any oil and gas royalties besides Franco-Nevada? Oh, yeah, they do have some oil and gas royalties in there, huh?
Yeah, up in Canada, there's Prairie Sky and Freehold. Down in the U.S., things like Blackstone, until very recently, CTO, which is being taken over. There are a variety of royalty plays in the oil and gas side. My principal holding has been Freehold. It's worthy to note that another of my Canadian holdings, Arc Energy, also has a fairly substantial royalty business, although that's not their primary business. And Prairie Sky is a large diversified royalty company, albeit Prairie Sky does not have a sterling track record in terms of recycle, the ability to add reserves from the margin on the reserves that were produced.
Okay. What are your rankings on Freehold, Prairie Sky, Blackstone?
Blackstone and Prairie Sky, I have both as 5s. Freehold, I have as a 4.
Okay.
Arc,
Right.
I also have as a 4.
Okay. All right. Last question here. We are tapping on the hour, is from Han. He says, hi, Rick. Could you please comment on Maple Gold Mines? Agnico invested in the company. What ranking do you give them?
I have Maple right now as a 6. I like where they're exploring, but I haven't seen data to suggest that they understand their deposit. If they are able to make a discovery, it's in a spectacular neighborhood, and it would be very easy for that deposit to be put into production using adjacent infrastructure. I just haven't seen sufficient data to suggest that an economic discovery is imminent.
Okay. All righty. Well, thank you, Rick. And thank you to everyone for participating. That was a lot of fun. We were pulling the questions from the Rule Classroom Plus. So if you want to play along next week, Rick and I will be on again next Thursday. Same bat time, same bat channel. And it'll be at 12:30 Pacific time on Thursday next week. Rick, any final thoughts?
Only one. I'd like to see all of you, either live or via live stream, at the Natural Resources Investment Symposium, July 7 through 11. Live is best, but I understand a lot of you have lives, unlike me. If it's inconvenient for you to come to Boca Raton, attend via live stream. We will probably have 2,000 live stream attendees in more than 30 countries. We've made substantial investments in live stream personalities and technology. Remember this, whether you attend live or via live stream, we're going to give you more information than you can absorb. To that end, at the Rule Classroom, there are interviews with all of the speakers and all of the exhibitors, meaning that you can familiarize yourself with the opportunities at the conference before the conference. Also recognize that the recordings of the conference will be available to attendees through the facilities of the Rule Classroom for a year after the conference. And finally, remember that unlike any other investment conference on the planet, whether you attend live or live stream, our conference has a full money-back guarantee. The financial risk is all ours. If you don't think that you got your money's worth out of the tuition, that money will be refunded to you. Nobody else has the confidence in their conference to make that guarantee. We've made it for almost 30 years. I'm delighted to say we've had to refund less than 0.1% of the tuitions that we've charged. But that guarantee is your guarantee that we are confident in the value that we will deliver to you.
Awesome. I look forward to it. It's going to be fun. This will be my second one in person, and I look forward to seeing all of you there, and you as well, Rick. Thank you for your time, and you have a good rest of the day, sir.
A pleasure, Steve. Thank you for your efforts on behalf of the Rule Classroom.
Yes, sir, as always. All right, you guys have a great rest of the day. We will see you this same time next week. Have a wonderful day.